Welcome to Beyond the Money with Jackie Campbell. Jackie is a certified financial planner, CPA, personal financial specialist, and founding partner of Campbell Company Wealth Advisors and CPAs.
I'm always a firm believer that prior planning pays, and you're never going to get to something if you don't even know where you're at and what path you need to take to get there.
Get more at mycampbellandco.com. Now, because there's more to life than just finances, let's go Beyond the Money.
And it's all powered by Campbell Company Wealth Advisors and CPAs. You can reach out at any time this weekend, 352-251-1015. We're always available at mycampbellandco.com. My name is Mark Owens. Jackie Campbell, it is weird to think that we're already talking about the end of the year. It feels like we just got out of the 150-degree heat about 10 minutes ago.
Well, something that I learned many, many years ago is that once you get to August, it's really, really fast downhill before the end of the year. So it typically means tax season is going to be around the corner. But what it is right now, besides the Burr months, besides all the great holidays for our families that we have coming up, Mark, it is tax planning season. So
I'm glad you brought that up, Jackie Campbell. That's right, because let's have a great discussion and a heavy conversation, if you will, about your tax strategy. And you just mentioned it. It is tax season. For a lot of people, they think, tax season's April. That's when I have to worry about my taxes. Not so fast. You're saying that now is the right time, and now is when you should be getting ahead of your taxes.
Oh, definitely. What a great year. What a great opportunity with the tax law changes that we've had for 2025 and the extension. We didn't have that sunset come into the end of this year. So different planning, but in a more proactive way. And oh my goodness, I think in the media, they must be talking about tax planning and meeting with your financial advisor, your CPA, your CFP more and more, because many are coming to me saying, should I do a Roth conversion? Should I do QCDs? And I'm so glad that to actually be hearing those questions being asked instead of it always being a lost opportunity for so many.
Okay, you just mentioned it, a Roth conversion. Let's talk about that, break it down. We talk about it a lot here on Beyond the Money radio show and, of course, the Beyond the Money podcast, which you can stream from the homepage at mycampbellandco.com. Tell me the pros and cons of a Roth and how it can benefit our overall tax strategy and retirement portfolio.
Well, to Roth or not to Roth, right? That is the
right.
question. So a Roth IRA is an opportunity if you're not going to be needing or using your individual retirement account, your retirement savings that are in those qualified accounts. You have the ability to convert it to a Roth, which means you pay the tax now. You're actually paying all taxes due on every dollar of that IRA, and you're actually being able to invest that and grow it and let it compound, and you don't have to take any more required minimum distributions for the rest of your lifetime. You're able to let it grow tax-free, which is a really, really great way for compounding over time for the future. It doesn't mean you can't use it. Yes, with the IRS, there's plenty of rules, but it's just about making sure that does a Roth work for me? Should I consider a Roth a little bit at a time, just do just a little bit every year, trying to keep those brackets in a certain range, or should I just rip the Band-Aid off and just do the whole thing? So that's really where someone who can not only understand your finances, but who truly understands taxation. And our team here at Campbell Company are all about making sure that we're paying the least amount of taxes legally possible, not just for this year. We only have a few months left. The window is narrowing, but also as we move forward and having a plan. I mean, that's how you get confidence, Mark. It's not about compliance. Oh, good. I filed another tax return. It's behind me. I've got the IRS, checked off the list for one more year. It's about having confidence in the plan that you're doing and a true 360-degree retirement roadmap. I mean, that's, yes, income planning. Yes, that's your investment plan. How much risk are you taking or should you be taking? And a smart tax plan. That is the third big pillar there. And then we have health and long-term care planning and legacy planning. But most people, almost all of us, and you have to ask yourself, is taxes one of your biggest worries in retirement, in your financial life? And I would say most people are going to say yes.
352-251-1015 to take advantage of that 360-degree retirement roadmap from Jackie Campbell and the team at Campbell Company. As we're talking about a Roth conversion here, you talked about the opportunities for no RMDs, potential for a tax-free retirement. Well, that all sounds great, but what are some of the cons of a Roth?
Well, the con is you got to pay the taxes now, right? Where's that money going to come from? So that's definitely one of the issues. Knowing your tax brackets. I mean, I'm a nerd, so I built a tax matrix. There's about 9 things that we look at every year to see what not only marginal tax bracket are you in, what is the top tier of your federal tax rate, but that's not even counting your state tax if that's an issue for you if you have a residency or you worked in another state. But just looking at the federal return, you've got your capital gain rate. What is that next step bracket before you go up in tax rates? What about the Medicare tax? The additional Medicare tax, 0.9. What about net investment tax, the net investment income tax, NIIT? That's a whole nother, 3.8% potentially that could impact your bottom line. But it's more than that. If you have children, it's tax credits, it's education credits. My gosh, there's so many credits that you could look at. But the other ones that are coming into play that most people forget, most tax return preparers, and remember, you don't have to have a license or any kind of formal training to be a tax preparer. You can prepare your own or your neighbors, but knowing what that IRMA is going to be. Again, that's another acronym. It's an income-related Medicare adjustment. So many are caught way off guard when they turn 65 and they're so happy, so celebratory to get to that 65th birthday so they can get their Medicare supplement insurance and not have to worry about COBRA or, having to figure out that whole planning strategy to stay under a certain income level to get that Obama credit. But to actually get to 65 and then find out that you're not going to be paying $185 a month like everybody else around you, you're going to be paying $300, $400, significantly more per month. And, it can be quite a big, what we call nuisance tax. So being prepared, planning, not going into things completely blind is something that we're big advocates of here at Campbell Company, and it all starts with prior planning. And we talk about that as well. Prior planning pays.
Aren't all taxes a nuisance?
All tax, yes. It's funny because we actually have kept track of this, and we've done a little bit of an internal study here. We have 10 questions on financial planning that we have in our initial questionnaire. And one of the questions is, how important is minimizing your taxes on a scale of 1 to 10? And they could be in the 0% tax bracket, and they're going to put 10. 10 is the most important. Yeah, that is an important thing that they always want to pay attention to because, who wants to pay another 10, 20%? I don't know about all of you, but, I grew up with the double coupon days back when I was working at a grocery store. So when somebody could get their grocery bill from, a couple $100 down to like $10, I mean, we all cheered and celebrated. A lot of work getting in all those coupons because, we didn't have scanners back then, so we had to do it all manually. But love, always looking for a savings, getting things for the very best deal that you can. And why wouldn't taxes be on that list?
352-251-1015. We have a representative standing by right now and throughout the weekend as well. So if you need some clarity on something you hear on this weekend show, you're ready to get serious about your tax strategy, reach out to Jackie Campbell and the team at Campbell Company. 352-251-1015. That 10 questions on financial planning, is that something that is part of the 360-degree roadmap? Is it something that we can get a copy of? Tell me more about that.
Yeah, no, that's just our questionnaire, just sort of to give us a guide of, what's your money story? What's your wealth story? Because we all have one. And, that starts at childhood, how we're influenced, who influenced us, what we've seen that, we say, hey, I'm never going to be that broke again, or I'm never going to, have to work 2 and 3 jobs like, I witness, this parent or this family member do. I want to make sure that I'm planning for the future. So, whatever that wealth story is for you, we're just trying to get an idea of so we can have a really good conversation. Because at the end of the day, Mark, it's not, just about anybody can prepare their own tax return. Just about anybody can, find an investment and figure out, okay, if you've got 10 options on your 401k, well, which one do I pick? Maybe I'll put 10% in all 10 of them, right? You can figure some things out, but truly having a guide, kind of like a a shepherd going along with you, and helping you climb through that journey called life, and not just relying on your own wealth story, whatever information or influence that you've had in your life, but truly having someone that's going to be independent and going to help you make the best decisions for you and your family, and kind of coach you along and guide you along. Otherwise, I mean, you're in the Jif jar, and it's full of peanut butter and maybe some crunchy peanut butter, and it's hard to see the label. It's hard to really see what should be going on and what really and truly is going on in your financial journey. And that's really what we do here at Campbell Company. We want to help be that guide, that coach who can help you navigate through all the tax changes each and every year, not just 1 year at a time, but truly plan for what your goals are in life. That's really what it's all about. So that 360-degree retirement roadmap is just about pulling those most important things, those 5 key things of a retirement plan all together for you.
352-251-1015 are always available at mycampbellandco.com. From the homepage, you can shoot the team a note. You can schedule that initial no-cost, no-obligation consultation. Again, mycampbellandco.com. Jackie, I'll be writing a letter or working on some scripts or something, and I'll still get confused whether to use whomever or whoever. And I feel the same way when you mention tax planning versus tax prep. Educate me again. What's the difference between the two?
Tax preparation is simply taking history. That is dealing with the past. It is what happened last year. It's what happened that's already history that you can't change. You can't do anything about it. That is tax planning. It is following the Internal Revenue Service forms from the very first income item all the way to the end. What credits are available, who's going to be dependent on your return, did you pay enough tax, do you owe penalties, et cetera, et cetera. Tax planning is starting at now. It's looking at the past. We're looking at the past for the history, the patterns. What is your norm? What is your normal income? What will be fixed and what's going to stay the same? What is going to be an estimate for this year and the next years ahead? So you're looking at past, present, and future. That's what tax planning is. That's what we do here at Campbell Company, and that is what I do as a certified financial planner and a certified public accountant. That is one of the biggest reasons that I not only went from being a certified public accountant, I went for my CFP, my certified financial planning license, because I was so frustrated at being the bearer of the bad news from every other professional's not paying attention and not seeing it through with their clients. An attorney would prepare trust documents, do their estate planning documents, and what they had in there as their beneficiary plan, their inheritance plan, wasn't what reality was. They didn't say, hey, take this to your financial advisor. There was no communication with the financial advisor to make sure these things were happening. You would have a stockbroker, and they would strictly buy and sell investments. You would end up with large capital gains, or even worse, mutual funds that have unpredictable capital gains that would hit your taxes, hit your income, hit your account right in December at the very last end of the year, and you had no control over that. So that was just a challenge. And guess who got to be the bearer of all the bad news? You owe more taxes. I mean, that was probably the most insulting thing that you could do as a profession was to tell someone that, hey, you owe an unplanned amount of taxes. And it's because of the lack of coordination between all of these professionals. So I am a big, big, big advocate of doing that comprehensive planning. I must think in circles. I don't know, but everything seems to be 360 degrees, and it all needs to be connected, at least in my mind, for me to make sure that you have a truly coordinated and cohesive plan. Because, Mark, it's not just about having accuracy and having a compliance and a tax return that's, check the box. Did I file everything? Did I get money back? Did I settle up with the IRS for 1 year? That's preparation and compliance. Planning is starting today, looking back, looking at this year, because there's so many opportunities going to be left on the table this year. And that is from that one big, beautiful bill OBBBA. There's a whole lot of other acronyms and names, but you all know what I'm talking about. It's about the new tax law that went into effect this year. For if you're 65 or older, you have extra potential credits. If you've been working and you're making overtime, you better make sure your employer is keeping track of that the right way so that you get the proper credits. Don't wait until the end of the year, till next year, January, February, then you're not able to do anything about it. So right now is the time to do tax planning. Don't wait. If you have any questions, anything that I'm talking about, and you're like, hey, I'm wondering if I'm doing the right things or all that I could or should be doing, give us a call. Would love the opportunity to talk with you. 352-251-1015, or you can go online at mycampbellandco.com.
Jackie, I know this time of the year is when things get busy, but let me rephrase that. I'm sorry. And Jackie, over the next 6-8 weeks are when things really get busy as people are thinking about the end of the year, flipping the calendar to 2026. So now more than ever, and you've said it before, prior planning pays. Now is not the time to sit on your hands and go, well, you know what, I'll give her a call in a couple of weeks, or I'll call at the end of the month. Make the phone call today just to get on the calendar to sit down with Jackie and the team at one of the multiple convenient locations of Campbell Company. 352-251-1015. Again, 352-251-1015 or online at mycampbellandco.com. I heard a commercial from one of the big box firms, and it was basically saying, like, give us a call and we will help you secure a tax-free retirement. And I'm listening to that going, man, I don't know. I know we've talked about taxes every week here on Beyond the Money. That just felt very clickbaity, if you will. But Jackie, I need to know, is it possible? Can you create a tax-free retirement for adults?
Well, if you plan ahead, absolutely you can. I mean, taxes they're nauseating, right? Like nobody likes to pay anything, and then some, you'll see the other extreme that get a really large refund back. And, that's just lending the IRS your money all year long, interest free. So it's just really about getting that sweet spot for you. My opinion, I like to see, you've got a zero taxes the base. Everybody's got the same tax rate system, right? You have so much of your income, whether you're single or married filing jointly, so much is going to be at 10%, so much is at 12, and then you're going to go up to 22 all the way to 37. But everybody gets a piece of that 10% bracket, 12% bracket. I mean, I don't know about you, but I'm comfortable paying 10, 12% as long as I can. It's so frustrating to me when I see somebody have a 0% tax bracket or a negative taxable income for a calendar year, and they have money in an IRA or a 401k, and they have not done any Roth conversions or any strategic planning at all. It is tactical. It is important. It is, why would you leave zero tax rate on the table? That is one of the things that will probably frustrate me and my team here at Campbell Company more than anything. So planning. We don't know if you don't, any preparer, I mean, in fairness for any CPA or any tax preparer, if you don't know what's going on, what changes they're making, interest rates are way higher now. They're coming down a little bit. What does that mean? What about mutual funds? Do you have mutual funds in your portfolio? I'm not a big fan of mutual funds because there's other ways to get the exact same return without having all the tax fluctuation and paying those hidden fees that you're not even aware of. So there's a lot of planning. Left behind 401ks. Why? You can't do quick planning if you ever need to or want to. But getting things simplified as we get older, I am there. I am approaching. The rock is in motion.
Moment, yeah.
Big birthdays coming up. And, it's all about simplification, getting things as orderly and simplified as you possibly can. Because guess what? I mean, Mark, you're still quite a bit younger than me. You've got a good memory. You can remember all these passwords. I struggle with them.
Listen, I think every time I log into anything, I have to change the password because I've forgot it. And I can only do a different variation of the same password so many times.
I feel like we should have a scorecard or something, about how many times we change a password to see who's going to get the big gold star on that one. But I know I'm going to be near the top on it. But, it's important to have that protection, right? Because there's so much identity theft out there. There's so many things going wrong. And, being able to sit across the table from someone and know that they have been in business for over 30 years, that they have had decades in our community, and have multiple designations like some of the members here of our team at Campbell Company, and have some hard-won wisdom. And I say hard-won wisdom because that is sometimes the best wisdom you can gain. And it's not just from mistakes that we've made. It's not just from mistakes that we've seen, one or two people do. Like, we've seen the repetition. We've seen the patterns. We know what some of those really challenging things can be, because it's hard to know that fine line between, should I do this and try to take on more income, or should I pay the least amount of taxes this year that I can and defer it and keep pushing it down to tax later. Get on that phone and give us a call. We are here. My gosh, October will be behind us. We're going to be in holiday season, and I've got a birthday season coming up, so it's going to get tougher and tougher in this calendar year. But with that additional $6,000 in senior tax credit or deduction, excuse me, and the $12,000 if you're married filing joint, gosh, why would you not take advantage of that? And if you can get that additional amount from your IRA to a Roth tax-free to grow tax-deferred, someone someday will pay a tax on every dollar in those retirement accounts. Don't forget that. Many do, and nobody wants to write a bigger check to Uncle Sam, to Internal Revenue Service, but guess what? Someone will someday, and I've seen it again and again when someone inherits your retirement account that you were so frugal about and clipping those double coupons and picking up those pennies. And guess what? They've got 10 years to now spend it down, to cash it in, to pay taxes on it. They won't have a problem paying the taxes on that. And, oh, well, I get to keep the other 70%. I get to keep the other, 80%.